Okay. So first question is pretty easy. What's your name and what's your relationship to me and occupation?
All right, my name is Gregory Unruh. I happen to be this gentleman's father, and I am a university professor at George Mason.
Okay. So first question.
Mhm.
Where were you living when the economic crisis in 2008 first occurred, and what was your personal view of what was happening?
Right, so we were living in Arizona, which was one of the epicenters of the housing crisis, and my opinion at the time was that we were in the middle of a bubble. I saw the bubble. I thought there was a bubble when we lived in Spain several years before that, 6 years. So my ability to make any kind of predictions is pretty much worthless.
So why did you think there was a bubble?
Well,
follow up.
People were a little fanatical about buying houses. Some of our relatives in Spain were buying multiple homes, homes that they really couldn't afford. They were being given interest rates and bank loans that they really shouldn't have been receiving. And then in Arizona, where we were living, a number of our friends had gone from a regular job to selling real estate. They were making all kinds of money and going out and spending, absorbent amounts on lunches and dinners and things, buying cars. And, I didn't see people's incomes going up. I didn't see, all of these other things that could allow people to buy more expensive homes, other than it was really cheap to get loans, and the banks and the loan companies were not sort of vetting buyers. So you could see that something was wrong, that the market, what we were taught in economics, wasn't going on. And the problem is that what I learned from that is that can go on for many, many years.
Yeah, of course. And so you personally, do you think that you contributed to maybe any of that happening in itself, or when the crisis actually occurred, did you personally face any hardships?
So yeah, so one of the things I didn't, when we were in Arizona, we were renting a place, and for many reasons, the family reasons, there was pressure to buy a house, and so we actually bought it at not the worst possible time, but almost the worst possible time. So the market peaked and dropped a bit and then sort of plateaued. We bought a place in the plateau, and then several months after that, the price collapsed by $200,000. It was a $500,000 house. It was worth about $300,000. So yes, I participated in the bubble, or the dot-com bubble, and even though I was kind of looking online, there was websites on the bubble will burst, and I've been looking at it for like 5 years, and even then
you still got a house, even when just because there was like pressure around you.
Yes.
Interesting. Okay. Going from that, I know that we were in Arizona when we bought that house. So, what laws or provisions were put in place in Arizona to prevent any long-term damage economically or just in general?
Yeah. So I think part of it was part of it were legal changes, but also the market kind of self-corrected. A lot of the companies that had been giving those really cheap loans, they called them liar's loans. You could lie about your income and things. Those companies suddenly couldn't get rid of those loans, and so they went bankrupt. And then the price of the houses deflated, so they came back to a more reasonable. Our house deflated $200,000, came back to a more reasonable thing. So that kind of corrected just the market itself. And then there was some governmental things, but most of the effort was, from my perspective, from the policy end, was just to reinflate the bubble, make sure there was liquidity so that the banks wouldn't collapse. And not a lot was done to hold people accountable for the business practices, and not a lot was done other than change. There were certain laws to change the amount of liquidity banks had to have. They had to have a certain amount. So there was a crisis, they would have liquidity, they would have money in the bank that they could use. Not everything was loaned out at risky loans. So there were some shifts, but I think it was mostly just the bubble popping, all of these people that had been living off the expanding bubble, having to find new work, so there was a lot of hardship, a lot of pain for people, but it really was sort of the classical economic shakeout and less policy. Policy should have taken, in my opinion, action before we got to that.
So I want to circle back a little bit because you said something interesting about liar's loans. Could you talk a little bit more about what exactly those were,
Sure.
Or as much knowledge as you have about it?
Yeah. So, the thing is, when I said that I saw people getting loans that I didn't think should get them, right? So, people both in Spain here, they were buying multiple homes, and their income had not gone up, and the rent they could get off the house was not enough to cover the mortgage payments. So in theory, they should not have got those loans. If you were a reasonable bank, you would look and say, no, your income is not enough to buy 3 different apartments. But what some of these loan companies were doing were they weren't asking you to prove. They didn't say, okay, you say you make $80,000 a year. Let's have 5 of your most recent pay stubs and let's see your taxes. They weren't asking for that. So it was a liar's loan. You could just say, oh, I make $150,000 or $200,000, and that would be put in as your account. You were lying, but that was the basis. And then what those companies would do is they would just bundle all of those mortgages they sold and then turn them into securities and slice them up and then sell them all over the world. So the liar's loan started at the individual level because you couldn't, theoretically, you shouldn't be able to get a loan if you can't pay for, you can't cover the cost of the pay, the interest payments and mortgage payments. So that was what liar's loans were.
So, I mean, kind of like going off of that, obviously what you're saying here, what you've been saying in the past, there's been a lot of extreme structural and even governmental powers put in place to, give people the ability to commit this, even if it's small scale fraud. Do you think that there could have been anything done? Because even you said you were somewhat aware that there was a bubble occurring.
Yeah.
Do you think there could have been anything done either in government, socially, economically, to be put in place in Arizona or in the U.S. or in Europe even?
Yeah.
That could have prevented this from happening?
Yeah, that's a good question. From my perspective, it sort of got started after 9/11. Mm-hmm. Because after 9/11, the markets crashed, and so then the Fed and the government provided, they just dramatically lowered interest rates and provided very cheap money to the marketplace. And so if you know economics, right, supply and demand, if there's lots of supply of cheap money, it can drive up the prices of things. And so, that decade between 2001 and the collapse probably was policy driven. They just artificially low loans, artificially low interest rates, and that allowed then these other assets like stocks and housing to explode. So that I think there was a policy failure there back in 2000. They should have, they were afraid that the economy would collapse or retract, but and so they didn't do that. But one of the things we know that there are business cycles, and one of the things that has to happen is you have to have a collapse and shake out the bad loans, the businesses that are not viable, and that's painful, obviously. First, people lose their jobs; they have to find new work, and so logically, politicians want to avoid that. But what it does is then it sets up for an even bigger bubble, which arguably we are in another one right now because interest rates are even lower, in fact, negative in some places. So, instead of the financial system supporting the new productive areas of the economy, it's supporting these old established assets. A building, and you get what we get. We don't the money in the economy doesn't go to creating new jobs and new businesses as much as it probably could. It goes to inflating and allowing people that already own assets to get wealthier and wealthier, and the people that don't have assets get more and more.
Okay. So I'm actually going to circle back a little bit more to something like to more of your personal experience.
Mm-hmm.
But so with us, you said that we bought the house during the plateau,
Mm-hmm.
and you touched on it a little bit already. But what specifically happened to that house and to our economic situation?
So the house. So we went and talked to. So it wasn't worth what it was valued at. And remember, at the time, I was the professor of ethics at.
Yeah.
So we had lots of conversations around the ethics of this. But what happened is we talked to a lawyer, and luckily the laws in Arizona were such that if you defaulted on the loan, the recourse for the bank was just to take back the asset, take back the house. They couldn't come after you personally. They couldn't come try to take your car. And so what we did is stop making payments on the loan and told the bank that they were free to come take the house back. And that's ultimately what they did. The bank took back the house, and then we saw later that they resold the house for a fraction of what we paid it. And then ultimately, some people we knew moved in as renters into that house. So there was a really interesting full circle. But yeah, and it was an ethical question. It was that we had agreed to buy the house for this price, but there's this argument. We didn't make that decision by ourselves. The bank was also involved in deciding whether they should give us the money or not. And so we let the bank take back the asset, and we licked our wounds from the financial losses.
So you say licked our wounds, which means we, as well as you can get off, I guess. We were not in a terrible position afterward, but
that's right, because we had got effectively a zero down loan. We got a loan for 80% of the house, and then the bank gave us another 20%. So we didn't have to put any money down. All we had to do was pay for the process, a couple $1,000 or something to do the paperwork. We'd done some. We done, as you remember, we did some things in the backyard a little bit. We didn't put a lot of money into it, and so yes, when the bank took it, we lost some money. But it was like the way I was sort of rationalized it to ourselves. It was sort of like we paid an expensive rent for those couple of years we were there. And it was a nice house. I liked it a lot.
It was
fun. I'm sorry we lost it.
It's not your fault. Okay, so I kind of want to go off that because being in Arizona, we were in a better situation just because of the laws that were given.
Yes.
But I know that we have a lot of family in Europe. In fact, we're going to see them soon. Actually, we're leaving today. But particularly in Spain, how was their situation? How were they impacted differently by the crisis? And did you or did us as a family do anything specifically to try and assist them or help them out?
So, as you remember, once we have the two sets of grandparents, the ones that are in Alicante, they bought that house a very long time. That's the only place they lived, and so the value of the house can go up and down. They're not leaving, right? So the fluctuations of the market didn't matter. They bought that as their home. And then our other family in Madrid, they had two places. One they bought at the one in Tres Cantos. They bought at very concessionary levels. It was a special government loan program. So fundamentally, what happened is they had the three homes. They had the one in Soto, up in the mountains, the one in closer to Madrid, and then the one at the beach. What they were able to do was sell the one in after the worst of the crisis had passed and things had stabilized. They sold the one in Madrid, and then used that to basically balance out the situation of the other two homes. Then they ultimately sold the one in the mountains and moved in for a long time to your great grandmother's apartment in Madrid, so that they didn't have any payments. So they were able to sort of manage that, as well as can be said. And they're now, luckily, they're getting their Social Security, and they have enough income that they cover all their costs and everything.
So you actually said something very interesting there that I want to kind of touch up a little bit more on, and that you said one of the housing was assisted or by the government in the form of a loan. um, or some sort of subsidy.
Mm-hmm.
And what's interesting about that is that, especially in Spain, subsidized housing is not as frequent, or affordable housing is not as frequent. So if you can, and you might not be an expert on it, but if you could discuss a little bit more about what exactly that government loan was doing specifically for them, or what policies were in place to allow that, would help out a lot.
Okay, so they purchased that home actually before I really knew them. But what it was just as you were describing, the government both funded the construction of those homes and the financing. So they got a concessionary price. The price was below market, and then they got the loan. At I think at fair market rate. So they basically got subsidized the price of the loan. And I don't know how prevalent that is in Europe. There are quite a few communities that kind of do that work. So they were able to take advantage of that, and that helped them. And here in the United States, you don't see a lot of. I don't know about the housing support systems we have. I think it's state by state, and my impression is, in the countries in Europe we've been to, like in Germany and France and some of the others, I get the sense they do a better job than most of the states here in the United States do, but I don't know that for sure.
All right. And it's interesting that you're circling back to the U.S. because that's what my next question is going to be about. In that, in the U.S., we have mostly, at least what the Dow says, have recovered from the 2008 crisis, at least economically. How has it changed your worldview, specifically of the U.S.?
Yeah. So yes, I would say the stock market has more than recovered. And again, when there's this old saying in investing, it's when interest rates are low, stocks will grow, right? And interest rates they don't really necessarily reflect what the market says they should be. They reflect what the policymakers of the Fed. So yeah, the stock market has recovered, but you look around, and it's even doing really spectacularly well in the midst of the COVID crisis. So there's sort of two economies, it seems to me. There's the finance economy, the stock market, and the investor economy. And we're lucky we have a 401k, we have retirement, government subsidized retirement accounts and all that kind of stuff. So we're doing pretty well in terms of the value of this, our stocks. But if you don't own stocks and you don't own assets, it's probably really, I think it's really, really hard. And so I think the actual economy that we live in, the stores that are closed, the people that used to work in the movie theaters or hotels, all of those, jobs are non-existent, and those people have to be suffering hard. Us in the sort of in the investor class, or the intellectual class, whatever you want to call it, the ones that can do work professionally, the professional class, right? You can work on Zoom or something, and you have your stock assets. We're doing fine. So there's a big schism in what the financial investment world does in the world of capital, and what's happening in the real economy, and that can't go on forever. What happened in France, that you had a revolution and people got their heads chopped off, and so there's a history of what happens when there's too big a difference in the distribution of wealth.
And that actually does go into the last question that I have, which is, and I mean, if you say something interesting, I'll add another question after that. But it's with economic issues occurring due to coronavirus, it is clear that not everything could really be done to prevent financial ruin, especially with impoverished people. What do you believe has to happen structurally or in law to help prevent another financial or economic disaster?
Well, first of all, I just think we have to recognize that the business cycle is what it is, right? And like Keynesian economy was supposed to use policy to counterbalance, not completely hijack the business cycle. In terms of the market, I think we've hijacked the business cycle. I don't know what we can do about that. That's just I'm not smart enough to see a way to get around that. What seems to always happen is new technologies and new business options come in, and that leads to another thing of growth. So leading up to before the financial crisis, we had the dot-com boom, and that created, all of this stuff we're doing now. And then I think, we're probably going to have another technological boom. Doing all the stuff you do, there's all kinds of things, AR, VR, 3D printing, all of this stuff, machine learning, all of these things are going to open up new opportunities for economics and growth. My concern is that, unlike the old days when we used to build computers or we used to build something, once you did that, you had to hire a bunch of people to build those things, right? You don't have to hire a bunch of people for these new. Not as many. You won't have to hire as many people. So I don't know if that's just going to exacerbate the inequality and cause. I don't know how to get out of economic ruin. It's a complicated thing.
It was kind of a big question.
Yeah, I don't think we necessarily. So maybe we're going to have to invent new policies.
But you did talk a little bit about Keynesian economic theory, and in our class specifically, we've spoken about Keynesian. Keynes, we've read a lot about Keynes, and we've spoken about post or anti-Keynesian theory.
Yeah.
Do you think that? Well, one thing that we did talk a lot about in our class is we had a reading that was is Keynesian theory a failure? Do you believe that going forward we should continue to have Keynesian politics or Keynesian economic theory?
Well, yeah,
and that also is a very loaded question.
Yeah, so I'm going to say I don't know, but from my perspective, I don't think policymakers have followed Keynes's advice, right? I mean, when the market, you provide stimulus when the market is down, but you don't keep providing stimulus so you get these big bubbles. So I don't, and it may be that a lot of times what's true, what's theoretically possible in economics is really not possible in the world of humans and politics, right? So it may be that you guys you're reading on the failure of Keynesian thinking, and maybe its actual practical applicability may be right. So I don't know the answer, but I think we're definitely going to need new economic policies and new ways to think about it, because a lot of production is going to be done not by human beings, and we think of income and we think people make all their money from the work, and if there are no jobs, they're not going to have income. So this is where Andrew Yang and those types of people are probably thinking about the right issues, and we'll have to create a post Keynesian policy world, I guess. I don't know.
Okay. Well, you really pulled out your MIT review stuff. All right. Well, thank you.
Pleasure, Jesse.
All right.